Shaikh Nawaf, thank you so much for taking the time to join us at the OPEC Seminar. A big theme that was discussed today was investment. And given the volatility that we're seeing in the price, I just want to ask you how concerned you are about investment in the upstream sector and what that means.
I'll take it from two angles. First, from KPC's perspective, we invest through the cycle because we know that we're going to be the reliable energy producer for decades to come. So whatever the oil price happens to be right now, is not indicative of what we will do for the future. We will invest, we will reach a production capacity of 4 million barrels a day by 2035 and maintain that over the next few decades. And that's because we have the resource base, but also because we are convinced that the call on Kuwaiti crude will be there for decades to come. On the other side of things, what I am concerned about is what others are doing in that capacity. And with oil demand increasing by over 1 million barrels a day for the foreseeable future, and decline rates being around 3 million barrels a day. So you have to replace about 4 million total between 3 million decline and 1 million overall net growth in demand. If we're not investing as an industry around the world in production capacity, we may face a shortage in the future. We saw that a few years ago, which came more or less after the stop or cessation of major exploration activities following the price collapse in 2015. As you know, it takes about 7 or 8 years from exploration to bring to production. So 2015 plus 7, 2022 or so, which is when we started seeing real tightness in the market because the extra oil that would have been available had exploration continued to be robust, wasn't available at the time. And now we had a quick few years of companies trying to catch up, but really need to see consistent investment in production capacity over the next few decades.
Looking more short term and into this year, where do you assess demand to be? And are you worried about, I mean, we're trading higher now, even post the OPEC announcements to add more barrels by August, which is actually just raising the production ceiling. Doesn't mean that these barrels are actually going to be hitting the market. It's just a raise in this production
Well, it
ceiling.
also means that there is confidence in the market and confidence in demand increasing in the market. We see a balanced market more or less right now, if anything skewed towards tightness in the market. And that's why you saw OPEC Plus accelerate the return of the 2.2 million barrels of voluntary cuts. They should be cleared out relatively soon. That is because OPEC Plus has been seeing, we're seeing this at KPC, that there is a robust demand that is exceeding the supply abilities. Now, that's, we're in the summer driving season usually, but if you start looking at it, that the additional 500-something thousand barrels, 500,000 barrels or so, that is coming on in August, that's going to be at the end of the driving season. So it is a testament to the belief that this is actually continuing into the fall and into a longer term structural demand increase.
Now, if you mentioned on stage that Kuwait made a third discovery offshore.
I haven't said that. What I've said is...
Can you clarify?
Yes, of course. What I said was that we have now drilled 3 offshore wells. 80 years of production of oil has all been onshore. And we've now gone offshore for the first time. Our first well came in as a very strong discovery, over 3 billion barrels of oil equivalent. Second one came in very, very strong as well. Our third one, we've completed drilling. We have not yet made an announcement on it, but it's quite good, and we'll make an announcement soon enough.
And with the neutral zone, where does production stand right now, and what's Kuwait's share?
In the divided zone, our share is 50% of that production. It's the Khafji production has returned quite robust, and Wafra production continues to ramp up. And we're quite confident in even additional capacity increases. We just announced a new exploration discovery, as you may have seen, in the region. So that is still remains a prolific basin for us.
Finally, I want to talk about the geopolitical risk in the region, given that we just, saw a rise in the conflict for a period of 12 days. The impact on energy markets was limited. We didn't get a disruption of supply per se, but would you say that the geopolitical risk is over, or is it still lingering around in the background?
Look, I've been in this business for the better part of a quarter century. I don't think I've seen a day where there has not been geopolitical risk, especially in our region. It's whether it's wars or threats or even economic risks that we have, but we have the resilience to supply into the market throughout all of those. We tested our contingency plans during this period just to make sure that they were robust and fit for purpose. Thankfully, we didn't need to implement any of them.
Can you tell us a little bit about them?
Well, I mean, certainly we have we've increased our storage of crude oil outside Kuwait.
Okay.
So we've announced already over 7 million barrels of crude
Where?
stored in between Japan and Korea.
Okay.
We will increase that even further.
Okay.
We have a strategic tanker fleet in Kuwait. We don't necessarily see that Strait of Hormuz will be physically closed at any time. 85 years of oil going through that strait. Not a single day has that strait ever been closed.
Yeah.
But you might see insurance rates increase. You might see tanker rates increase. We certainly saw for about a day or two tanker rate and insurance rates shoot up. But that's why we maintain a strategic tanker fleet of 10 VLCCs, very, very large crude carriers, each equipped to handle 2 million barrels of oil, along with product carriers. We maintain that strategically so that we can bring them into the Gulf if others cannot come in or will not come into the Gulf, which is what we did in 2003 during the Iraq War, when tanker rates had shot up. We used our strategic tanker fleet to shuttle oil and product into the Arabian Sea and then do ship-to-ship transfer from there onto the international markets. So we have that available, and in fact, when tensions did rise, we started positioning our tankers so that we could make them available strategically if we needed to do that. We continue to have storage options and evacuation options essentially for our crude and products, but we can't defeat the geography of where Kuwait lies at the northern part of the Gulf with no other access other than through the Gulf. Again, we don't think that there is a physical threat to maritime shipments through the Gulf, but there may be economic ones.
Thank you so much for your time. We really appreciate it.
Pleasure.
Thank you.
Thank you.